All right, y'all. Today we're going to talk about one of the most important things when it comes to looking for trades, and that is market structure. Now, it's not very complicated, but it's very, very important when it comes to finding a trade setup. Now, this course is sponsored by Antarctic Exchange, a complete game changer when it comes to trading crypto. First of all, no KYC ever because it's completely decentralized and you are holding all your own assets. You're not trusting anybody. There's no chance of a rug pull. There's no chance of a scam. And because it's decentralized, there was 100% transparency. Every single filled order will be on the blockchain for all to see. Deep liquidity, you're not going to have issues getting orders filled. The Casper crew will have very low fees, lower than any other exchange you can trade on. And what's great about this exchange is ownership. All traders on the Antarctic will get a portion of the trading fees that the exchange makes. And of course, it also has the ability to participate in the liquidity pool because there's no market makers. There's a peer-to-peer liquidity pool. We are all providing the liquidity to the exchange. More information, of course, is on the website and in the white paper if you want to see the details on how that works. But you even have the opportunity to make money as if you are the market maker, benefiting from liquidation fees and the basically the profits that the liquidity pool makes. So guys, make sure to click the link in the description and the pinned comment to trade on Antarctic Exchange, solving many problems for us crypto traders and completely changing the name of the game when it comes to derivative trading, and a lot of exciting things to come in the future as well. So I want to talk about market structure. What is market structure? Market structure is how you determine the trend. What is a trend? Well, there's two types of trends. There's an uptrend. An uptrend is characterized by price making higher highs and higher lows. Higher highs and higher lows. And an uptrend is also characterized by a big move to the upside and then a small move to the downside, and then a big impulse to the upside and then a small move to the downside, and then a big impulse to the upside. Now, these big moves to the upside are called impulses, and then these little moves to the downside, these are called retracements. All right, you hear people say, yeah, we're getting a little bit of retracement here. What is a retracement? It means we're still in the overall uptrend, but price is never going to go straight up like this, right? It's always going to go up a lot, down a little, up a lot, down a little, up a lot, down a little. Now, the trend is your friend until the end. What does that mean? It means you can always assume that the trend is going to continue until it doesn't. So how do we know when the trend stopped continuing? Well, once we do something like this, and you think we're going to make a higher high, but we don't, we make a lower high, and then we make a lower low, now you say, whoop, trend reversal, because we were making higher highs and higher lows, but now we've seen this change right here. All right, now, when you see a change, this means the trend has switched, and you should look for trades in the opposite direction. Now, a lot of times, there's two ways to take a trade. You could try and catch a knife by trading your exact level, or you could kind of wait a little bit and see, okay, we're coming to, let's say we have a key level here. Let's say we have a value area high, we have a daily level, and we have like key resistance here, but we don't want to catch a knife. We want to wait a little bit. What we can do then is we can say, okay, let's see what happens here. We get our first rejection, but maybe it's going to be a higher high, right? Oh, no, we make a lower high. Okay, once we make that lower high, and especially once we make that lower low, now you can say to yourself, okay, I'm going to start looking for a short trade in the opposite direction, right? Because we're reversing the trend here. And so I kind of want to talk about market structure and how we're going to look for trades without looking to catch the exact top or the exact bottom. Let's say we're in a downtrend, right? And we are coming down and we have like a key support like this, right? And we come to the support and we get a bounce. And now all of a sudden we're changing market structure. We've actually made now a higher high for the first time in this downtrend. Now what we can do is we can look for a retracement. All right, we can look for a retracement. The retracement now, we're looking for a higher low, and we're expecting now another higher high. So what you're going to be doing here, as you're looking at the price coming down to support, and then breaking this structure, remember, high, low, lower high, lower low, lower high, lower low. This was our last lower high. So as soon as we break that, once we start to get that move back to the downside, you're in buy the dip mode. Right? You're in buy the dip mode because now you're saying the trend is broken. The downtrend is broken. So now we can look for a move, a bounce from a higher low. Now the same is true for a short trade, right? Let's say we have our resistance up here. We're getting a move, making higher highs, higher lows, higher highs, higher lows, higher highs. Then all of a sudden, what happens? We make a lower low. All right. I've got to actually we got to move this back here because I'm running out of space on the dang screen. All right. All of a sudden, Oh, hang on. All of a sudden now we make a lower low like this. And so now we look for a retracement and we look to short the retracement and we would look for something like this. All right. Now, I know that this is super, this is basically just like abstract here, right? But this is in general what we would look to do. And I don't know what the heck is going on with my drawing. I guess it's just too small on the screen. But that's how we're going to deal with market structure. Now, I want to show you some real life examples where this kind of happened. All right, this is our, let's go to our 24-minute time frame here. So look at this. All right, for example, we had ourselves a downtrend right here where price is making a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Then all of a sudden we make a higher high. As soon as we make that higher high and we take out this previous set of lower highs, our spidey senses should be tingling. What we're going to do is we're going to look for a retracement, a higher low, and then look for the trend to continue to reverse. Higher high, higher low, higher high, higher low, higher high. Do you see that? Your first tip off that the trend is changing is simply just a change of market structure. You're watching as we're making lower low, lower high, lower low, lower high, lower low, lower high, lower low. Whoa, what is this? A higher high? Okay, I'm not looking for lower lows now. I'm looking for a long trade at a higher low. And I want to show you something else that's quite important here. When we are looking at our boxes of support and resistance on the chart here, you know, this area has been historic support, right? So we saw our trend reversal, and then we can say to ourselves, okay, without any fancy tools, because we have changed market structure here, because we've made a higher high, the next time we come back down into the box, it's actually going to be my next long trade idea where I'm going to look to come down here and I'm going to look to take a long from the box. We're going to take it back to the top of the sideways range. Remember, we're not going to forget the context of sideways ranges, but within the sideways ranges, we're going to be looking at the market structure. This is a local downtrend. All right. Then we flip into a local uptrend. Now, of course, this local uptrend does become invalidated once we take out this last higher low. Of course, it was very difficult to get into a trade here because we didn't really get a retest. This one you would have had to basically short the knife catch, which, you know, honestly was a very key level. Which was,
well, folks, we won the election, but most importantly, we pumped the price to a new all-time
sorry
high.
about the Trump thing. A very key level, which I did short here because it was a key level, right? Set up given in the Casper crew in advance at jasoncaspertrading.com. So the best trading community in the world, by the way, jasoncaspertrading.com. We have multiple instructors giving you their exact TA every single day, telling you the trades they're looking to take. And, you know, we don't give signals, but sometimes we do tell you when we're going long or short, not financial advice. All right, let that be what it is. This is how we're going to take trades using market structure, okay? Let's take a look at another example here, which is this. We are in an uptrend, right? We are making higher lows and higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Whoa, lower low. We just changed market structure. Now we make that lower high. Boom. That's where we get into the short trade, right? So once again, I want to point out the fact that this right here was our historic support. Resistance, I mean, right? It was a support resistance flip. We can see that we wicked into it once here, and then we consolidated here. And so this is the area now where we have the change of structure as well as just our support resistance level to look for a short on the way down, right? Do you see how it works? And then what you can do is you can add other things to your chart, like your high time frame levels, like your volume. Now check this out. If we use our fixed range volume profile right here, guess what? Guess what? We came down below the fair value zone, right? We came down below the fair value zone. Could you have caught a knife down here? Yeah, you could have. I think I might have taken that trade because there were ways to take it. But let's say you're not a ninja knife catcher. Look at this. We lose the fair value zone, but then we change market structure because we're making high, low, lower high, lower low, lower high, lower low, lower high, lower low. Then all of a sudden we make that higher high, right? Guess what? We come for a back test and we get the bounce, right? We back test value area low. We come to retest it again. And so we know, okay, we're back at the undervalued zone. That could give us our entry right there. Or honestly, this doesn't always happen. In fact, this is rare, but we get another higher high and then another higher low to backtest that value area low again. But you can see here, once we change the market structure, this is now telling you, get ready to buy the lower, get ready to long the lower high. And so when we get a chance again to come back down below that fair value zone, still maintaining now this market structure, this gives us our very clear trade setup where we know we're wrong if we make a lower low, right? This gives us our stop loss. We know we're wrong if we make another lower low, because the whole reason we're taking a trade here is because we're changing market structure, right? So now we have a thesis. Aha, we're changing market structure. If we get a retest, if we come back down into the low value zone, I'm going to take a long trade. Where's my stop loss going to be? It's going to be at the place where my idea that the trend is changing becomes wrong. My idea that the trend is changing becomes wrong if we make another lower low. And so now we have our stop loss, we have our entry, and we have a potential take profit, which could be back at the historic high of the range, which was 1, 2, 3 taps right into this $98,000 level. It's a really nice 3.5 risk to reward ratio. And depending on your entry, could be even more, right? And so if you have daily levels, volume levels, weekly levels, stuff like that, this is how you're going to get your trades based on market structure. Now, some things that people do is this, right? They will just look at the market structure and say, okay, we came down, we changed structure. As we come down into this zone, some people literally just kind of DCA in. They might take their position size and do like 3 limit orders with their stop loss below here and then shoot for their target. And that's a very low-key way of taking a trade, right? You just basically have your idea, change the market structure. If we get a retest, I'm going to load up in this zone, no precise level, just kind of load up, maybe 3 buys. I'm looking to put $100 on the trade, $33 here, $33 here, $33 here. Hopefully they all get filled. Maybe they don't. If they do, great. We ride the trade. If they don't get filled, then we ride the trade with a smaller than we wanted position size, but it's still all good because we're still using good risk management and making money and stuff like that, right? And so what I like to do, and this is going to get into our next session, I like to use Fibonacci retracement tools to give me the exact levels that I'm looking for a retracement. So here's a great example. I'm just going to give you a little teaser. We have right here an uptrend, right? Where we're making higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? And then all of a sudden we make a lower low here. You see that? We take out these lows. Then what does that mean? It means we're looking to short a retest. Well, where do we look to short the retest? With Fibonacci, you can actually get very precise levels to look to short a retest, which is how I was actually able to take this short trade that you see right here, because I shorted the Fibonacci golden pocket. And so next session, we're going to be talking about Fibonacci and how you can use Fibonacci in conjunction with market structure to really get those precise entries. And for example, taking a short trade like this, where you have a really good risk to reward ratio back down to the bottom of the range, a 7-to-1, as opposed to just kind of saying, well, yeah, I know we're changing structure and, you know, I'm going to DCA in here. This is a 1-to-1, right? It's difficult to trade if you don't know where price could potentially reject from. So you're looking at these levels. When you see the rejection, you're like, aha, good risk to reward ratio. I know where my stop should be. I know where my target is. I'm going to go ahead and take it. So next session, we're going to be looking at Fibonacci. All right. Just a quick reminder, guys, Antarctic Exchange, changing the game for trading. Everything is self-custody. You're a partial owner of the exchange. So if you're trading on the exchange, you're literally getting paid just by participating in the exchange. If you're providing liquidity to the exchange, you are getting paid part of the liquidity pool profits. Everything is self-custody. Everything is decentralized, meaning you hold everything in your own hard or hot wallet, so there's no risk of your assets being stolen, frozen, taken away, or any of that. Link in the pinned comment and description. God bless you guys, and I'll see you in the next session. Peace.